Hello and welcome to this series of fireside chats to talk about all things payments with a selection of CGI's clients. I'm your host, Gareth Lodge, a principal analyst at the research and advisory firm Celent. I'm delighted today to be joined by Matt Loos of Scotiabank. Matt, many thanks for speaking to us today and sharing your thoughts. Could I start by asking you to say a little about you and your bank and how you view payments? For example, is it an area of strategic importance for you?
Hello, Gareth. Thanks for having me, and excited to be here. Payments has been part of my life for a very long time. I've been in the industry for over 20 years, really focused on the wholesale side. I've been at Scotiabank for closing into a year, and been at other large U.S. banks focused on payment modernization. And it's a massive focus for us here at Scotiabank, right? The global transaction bank, right, which is inclusive of global payments, liquidity, and other solutions for clients all the way from consumers up to large corporates and financial institutions, has been a priority investment for the last few years, really with a focus on client primacy and client experience. And transaction banking brings both of those to the forefront. And payments is a critical part of that, right? Everybody does a payment every single day, right? Me and you, right? Do payments for whether we're buying a coffee, right? Or moving money around our accounts for investment purposes. And obviously clients as large as very large institutions do the same. And so we find it critical to make sure we've got best in class solutions. But as we're talking about today, the payments industry isn't standing still. There's a lot going on, right? And so you've got to make sure you're flexible as well.
That's maybe a good segue into the start of the conversation. There's a couple of things you said in your introduction about payments being so critical and the technology behind them is key to this. So perhaps with that in mind, how do you view technology providers? Are they just a vendor or something more like a partner? Indeed, what makes a good provider or a partner for you?
Yeah, I mean, I think in payments in general, partnership is a very critical and key word, right? If you think about, cross-border payments and the correspondent banking model, it's all predicated on partnership, right? The model requires, right, banks to work together to create an end-to-end solution that's valuable to clients. So resiliency, right, and stability is a critical function that's table stakes and, something we focus on massively right here at Scotiabank, but as is industry, obviously it's a very important aspect of completing payments for clients. I always say, right, moving money, right, is a very specific function that requires, right, attention to detail. But we're also, I kind of touched upon it in my opening, the payments landscape globally is changing. It's in a massive flux, right? We've in a general sense, other than a few enhancements here or there, for the last 40 years, most cross-border payments have occurred in the same way, right? Through the SWIFT network, right, and partnership of banks, connecting through that network. But as new payment types become available, instant payments in a lot of domestic markets, we're talk later about the possibility of even stable coins and crypto and all these other things that are out there that are always linked to payments as well. It's really critical that your partner, right, your technology partners, so they're willing to understand your needs and be flexible in how they can offer new capabilities, new services, with really the client experience at the center of it all.
Absolutely. That's really interesting. And I like your analogy of it's like cross-border payments, because I think two key phrases from cross-border payments are trust. So you want to trust in your partner, they're going to do what they're going to say they're going to do, how they're going to do it, and they'll just get on with it. And relationship. You're relying on that relationship to drive you forward. So that leads nicely into the next question around payments modernization. Now, that's something that many banks are currently undertaking, though many banks are at a very different stage of the process or different reasons and with kind of different outcomes that they're trying to achieve. I think from the outside, looking in, what makes your story so interesting is you're not just modernizing, but consolidating and across countries too. What drove your decision to either modernize or the approach that you're taking? And kind of what benefits are you trying to achieve or are you seeking?
Yeah, I mean, I think that to start, obviously we've had payment systems that have been around, and this is I've been at multiple banks now, pretty consistent across the industry from what I've seen, right? Large mainframe payment systems that have done very well, have been very stable, secure, knock on wood, and have allowed, right, banks to enhance around the edges, but their stability and resiliency and their cost has been relatively, right, reasonable compared to where the market and the industry is going. So it's become a very difficult business case over time to put in the investment to kind of revamp and modernize, right, that ecosystem when you didn't have many incidences, right, and the cost was reasonable for the value you received. The real challenge has been as time goes on, that technology becomes older and older, and it's really more about the individuals or the people that can actually work on those platforms. They become much smaller and more limited, and that starts driving up cost and driving up risk. And so at some point, you've got to sort of pull the trigger and make that modernization decision. We did that a few years ago, and right, and asking, why now, what's driving it. As I mentioned, right, the transaction business is a massive focus for Scotiabank, right? It's something that we think, brings us that client primacy. It allows us to get very close to all of our clients, and it's something all of our clients do. And so it's a big investment end to end, and it's a big investment globally. Obviously, we're starting in, the markets that we're in already, Canada, right, as one of the first because it's our largest, but the U.S. as well, right? It's a big investment for us, right? We've been in the U.S. in the transaction banking business, but with relatively limited capabilities, and we see as an opportunity, right, to build out best-in-class capabilities that are comparable to what we have in Canada. And then also we've got markets like Mexico and Latin America and the Caribbean that are quite unique. And we think when we start bringing all of those together, we create a very unique proposition to clients where you can come to us in the same way, right? Channel agnostic, whether that be via file, web, API, whatever means you need, and get a consistent offering cross currency, cross markets. And that's critical for us, right? Clients want, right, less banks when they can. It's, the larger the client, it's difficult to have one bank and they never will, right? But it's simpler for them to have less banks, but they also want consistency. They don't want to have to be able to do one thing in one market and another thing in another. It becomes very difficult, right? As the treasury teams across, the large client set are dealing with small budgets as well, right? Limited investment. And we feel as a bank, right, it's our job and our opportunity, right, to bring a better service to them, a consistent service with service at the heart of it. And thinking about a client first approach. What does the client need? Why do they need it? And how do we bring that to them in a meaningful way that brings them value? And a lot of that value today in the payment space is focused around data. Data is a critical aspect of payments because the reality is a majority of cross-border, a majority of domestic payments in most markets today are electronic. And so to me, what that means is it's actually just data passing back and forth, right? The paper's been eliminated in a lot of markets. Obviously, I sit in the U.S. where we're still a check-heavy market, but we're unique compared to most of the world at this point. I think with the install of instant payments in the U.S., as well as also as generations get older, there's a big hope, right, that the check volume will continue to decrease. Will it ever go completely away? Probably not. The same as cash. Cash will not completely disappear, right? It will be a means and a mechanism in most markets, right, that exists forever. But the electronification of payments has already occurred in most markets. It continues to advance with instant payments. And with that, it's passing data. Along with that data, then determines liabilities, right, assets, and the rest on balance sheets accordingly and passed down to clients in a similar way. And so that's that data focus as well. That's been a big critical aspect to some of the investment and making sure, right, that we think about how we present that data to clients to help them become more effective and more efficient.
That's a fascinating answer, a really good answer. And kind of to play that back, I think what stands out for me compared to how I've heard others in the market talk about this, you didn't say because, well, we had to do Payments Canada modernization. You said the client. You said client multiple times. And I think too often we speak to banks who do a modernization program with a view to doing just enough to meet the next requirement or to move the needle on cost a bit, rather than saying, we need to do this for the client. And I think too often, particularly as we're getting almost to a tipping point of modernisation, there's that naivety there. The client won't see their other bank having done something and going, well, why am I struggling with green screens and 28 screens to do this here? Where here, I don't need a degree in payments to understand what I need to achieve and what I need to do. So I think that's a really fascinating answer. And then to do it for all the other markets as well, that's no mean feat. There must be
I think
times.
just as well, Gareth. I think it's important as well. You think about the client and the client expectation, and think about the prior investments in the payment landscape, and fintechs coming in and providing different experience and different opportunities, more focused on the consumer retail space because that's the easiest really to infiltrate from the start, especially with the internet, right, and apps and the ability, right, with smartphones. But what we start seeing as well is those clients who have an experience on the retail consumer side are now corporate treasurers, and they're expecting that same experience, right, when they come into work, right? And so we were sort of lagging slightly in that experience angle, and so we're sort of trying to catch up. Right, but there's a different expectation as well, right? There's an expectation that things should be simpler and easier and very transparent and straightforward. And so you've got to build that into your thinking all the time. You've got to think like the client. What would the client expect or want to do? And what have they maybe seen in other parts of banking in their own personal life or in other areas that we need to make sure we replicate in the wholesale space as well?
Couldn't agree more. And I think there's also an interesting parallel without mixing metaphors, two sides of the coin. What would you see in the consumer experience side of things? But what do you already do in the bank for consumers that you could do for corporates? And that use of data, the personalization of products, understanding that client's workflow, using data as a foundation to drive better decisions, whether internally or externally, is increasingly going to be important, I think. I guess that leads into another nice linkage and talk about ISO 222, because one of the big promises there has been around it's going to deliver more data in a more structured way, and then we'll be able to leverage that as a more consistent way across all the different payment rails. You're in the US. Canada is going through the ISO migration for many of its payment rails, if not all of them. And so there's a kind of a two-speed, not two-speed, maybe that's the wrong way of putting it, a different speed of adoption. FedWire and RTP and FedNow are all 222 based. We very much tell our clients that this is the start of the journey, though, with ISO, rather than the endpoint. It's not just another payment format, it's what it enables. So what kind of benefits, if any, do you see for the future? Is it for you or for your clients or for both of you?
I think, yeah, it's a really good question. I think it's for all the above, right? It's always the straightforward answer. It says it impacts all. But ISO, to your point, it does a bunch of things. One, it starts creating some more global consistency. Now, we know we're not always going to be 100% consistent, right? Because there's different versions of ISO as well. But it does bring a lot more consistency to message types in different markets. It also, to your point, it brings in more data in a more structured way, which I think, we can't talk about payments. We can't talk about all these things. We talk about ISO. We have to talk about artificial intelligence as well because it's out there. It's real, right? It's been, in my opinion, in the payments industry for decades already with the onset of, machine learning, right? Where we've been doing that for straight through processing and other things. But now when you put in the power of what artificial intelligence can do and get your data in a very structured manner, more consistently and globally, you really now you kind of multiply those two together, and you've got the opportunity to do something that before would have been very, very difficult and costly to do in a consistent way. And that's from processing transactions, right? And processing them in different ways, where you can take an existing transaction and maybe flip it to another payment type because there's a need for speed or a need for efficiency, which prior would have been very difficult because the pay types had a very unique structure in most domestic markets, right? Everything was very customized. And so it was possible, but it was difficult and required a lot of mapping. That's been simplified. And then I think the other thing is how you take that data, one for processing, so how you can get better and more intelligent on the transaction while it's in your ecosystem, whether that be for sanction screening or compliance checking, right? And doing things in a more efficient way. We talked about straight through processing, right? If you need to repair, can you automate some of that repair, right, in a more simplified manner, right? So there's the efficiencies of the end-to-end processing cost and time. And then there's how you can present that data back to clients to give them opportunities to see where they might be able to do things more efficient on their end as well, whether that be by pay type, right? Or also just giving them data to understand, where they may be seeing growth in markets based on where they're making payments or declines in meaningful ways and in more real time, right? And that's the real critical piece of data today. I think data's been there for a while. It's been there in the treasury space, right, in different ways, but it usually was difficult to get real time data, right? So if you were a treasurer 10, 15 years ago, you were doing cash forecasting months behind, right? By the time you got all your data compiled for a month and tried to do the forecasting, you might have been already at the end of the month or into the next month, right? So you're always lagging in the information and then the ability to forecast. And I think what all of this will do, right, because we can use the data more effectively and more efficiently, is give clients data more real time, give them insights as well, direct insights, suggestions on things they can do, right, to be more efficient, be more effective, and really start changing the paradigm of the corporate treasury function, which is being much more proactive as opposed to reactive. And that's a big shift and a big change, right? But I truly believe, right, that it's where we're going, and it all starts with the data.
Absolutely. And I think it almost creates a bit of perhaps a virtuous circle, maybe. The need to move to ISO 20022 means payments modernization. And through payments modernization, you're moving away from batch processes to more 24/7 cloud-based potentially, and so be able to give that data in real time and start to build other propositions around that data, around that availability, and support those companies who are operating in countries that have different banking opening hours, for example, rather than this is how it operates and that's what you're going to get when you're going to get it. So it doesn't mean you have to change, just gives you the opportunity to change and evolve over time. So those foundations to move forward. And as you say, AI is only as good as the data that goes into it. We've been using AI and fraud for 30, 40 years to be there, use that for insights for your clients as well as your own internal uses, cash forecasting, their overdraft requirements, kind of all the things that they want to know about. That's going to be a game changer if you do it right.
Yeah, you referenced something, right, that I think is important as we talk about payment modernization. This 24/7 world, it's here, it's coming, it's here, right? Whether we realize it, want it, or think we need it or not, it's here. And in the payment space, it's sort of becoming the new norm. And right, and I think it was another driver as we saw, right, the install of domestic instant payments around the world that all started as 24/7 type infrastructures in most markets. And then, right, you see the client demand, right, as the world continues to become more global and payments are really the connectivity to that globalization. It became clear that banks were going to need to upgrade their ecosystem to be 24/7. And so that drove some of the modernization needs as well, right? Along with ISO, we shouldn't right? I mean, it's always a good opportunity when you've got a big change like that. And for us, we thought it was vital as ISO came out that where as much as possible, we made our systems ISO native. So right, that's kind of the core language now, the ecosystem will use, because the reality is not all ISOs equal, but right, the world's moved to a majority of ISO from a payment perspective, right? And having a consistent format at the core, right, gives you a lot of opportunities and advantages.
Absolutely. And I won't derail today's conversation, but I quite often talk about the difference between modernization and transformation. Modernization is replatforming and an incremental change. Transformation is going, well, now we can do this. What should we do rather than what we've always done? And that feels very much the journey you're going through. So we've managed to tick off one of the buzzwords. We've briefly mentioned AI, but I feel we've broken some kind of 2025 payments rule by not mentioning stablecoins. So why don't we talk now a little bit about the future? Because what we've seen over the last 10 years, even 5 years, that the pace of change in payments is not just continuing, but probably even accelerating. Not just new demands, but new possibilities. And so not exclusively talking about just these two things, but what's next on in your thinking or horizon? We talked about AI briefly, stable coins. Are those the key things? Are there other things that you're thinking about now?
Yeah, how did we come this far, right, without referencing a stable coin in a more direct? I mean, to me, to keep it, there's one thing for sure that we probably all agree on is none of us really know what this is all going to look like 10 to 20 years from now. We can all predict, we can all adjust. And if we probably did that 10 or 20 years ago, I think we would have thought maybe we were further along or it was quite different than it is today, right? If you went back, 20 years ago. But the reality is the next 10 to 20 years is going to look quite different than the last 20 to 40 years, right? The amount of investment, the amount of change is real. It's happening. It's global. So for that reason, I'm going to use that term and it's like that flexibility because we don't know we need to be flexible and we need to make sure we're building a payments ecosystem that has flexibility built into it at its heart so that if tomorrow for whatever reason a stable coin becomes the way every client wants to move money around the world, we can plug it in without redoing the entire ecosystem, right? And so that's our focus when we think about kind of the stable coin, tokenized deposits, all of these terms, right? um, we don't know, right, at this point, right? I think we're a very close eye on stablecoin. I think a lot of that's driven from some of the regulation announcements in the U.S. and now Canada's, looking at that as well. But we do know one thing that we're going to need to be able to do pay types using, value that's different than it is today, right? Will that be, a tokenized deposit? Probably, right, as tokenized deposit could be the underpinning future of how all banks manage, right, kind of their core DDA platforms, right? Because that's another area where banks, right, there's one thing every bank has and one thing that's relatively consistent. What's the first thing you do when you, as an individual, when you join a bank? You get an account. It's like step one, right? It's the core and foundation. And the reality there is that hasn't, right, the revamp of all that at most banks has not occurred, right, globally, right, maybe in small pockets. And so I see tokenization as the opportunity to do that, to be more efficient in how you manage, right, that account ecosystem internally, but also how it may be able to interact with other banks, right, externally as well in more efficient ways, right? We always hear the term smart contract and triggering things, right, to be more automated. And so some of this new technology drives that. But for us, right, we know one thing: we're not going to be able to predict exactly what the future is going to look like. So we're very focused as we modernize, and as you mentioned, transform kind of in a parallel setting, which is difficult, right? But you got to modernize first. You've got to get that ecosystem to a point where it can have that flexibility, so that then as the market could move quickly in different directions in the next few years, we're ready for those quick moves and can quickly pivot where we need to based on that client demand. And that client demand is going to continue to shift. And my gut is it will shift based on segments. It will shift based on, right, size from consumers up to financial institutions. And right, we want to cover the full gamut, and we want to make sure we've got capabilities and functions that can help clients of all sizes. And so, we need to be prepared for that. And so that modernization is our focus, and why AI as well, because I think we can do a lot with AI to speed up modernization, right? There's a lot you can do, right, with artificial intelligence to look at what you used to do, look at old code. It gives you an easy way to look at things that previously were very difficult to simplify and look at in great detail. And so we've been doing a lot of that work as well to understand, well, what were we doing before, even though maybe quite old code, and now how do we want to do it in the future? Because number one, you don't want to just build like for like, right? You need to, as you modernize, you need to transform in some way. You need to get the basics correct. You need to get them right, but you want to make sure you're building for that future state, and that future state, from my perspective, is the great unknown. Other than it will be different, it will change, right? The dynamics will change. The regulations will continue to change, right? The expectations from clients will continue to change, and they have higher and higher expectations on speed and cost, right? And transparency, and all of these important factors that are critical. And so we've got to make sure, right, that we're ready for whatever that future may hold, and that we build a modern ecosystem that can be flexible enough. If it's a stable coin, if it's a crypto, if it's a central bank digital currency, if it's a tokenized deposit, right? We can name all the buzzwords that are out there, that we don't care, right? We want to be payment type agnostic. We shouldn't care if a client wants to use that payment type and we feel it's secure and safe for them to use, and we can do it in our ecosystem. We want to do it on our ecosystem, right? So that we can provide that value back to our client.
Absolutely. And I'm reminded of one of my favorite quotes, which I often manage to squeeze into a presentation, but it's from the late great baseball player Yogi Berra, where he said, "The future ain't what it used to be." And I think that's the point. You can't prepare for the change, but you can prepare to change. And I think
Correct.
that's the critical part to all of this. Matt, I could spend all afternoon talking to you about things all to do with payments, but we need to wrap it up there. So I just want to thank you for your time with such great answers, some really good insights there. To thank CGI for sponsoring this series of webinars, and to say I look forward to people joining me for the next video. Thank you very much.
Thank you, Gareth. Appreciate it.